SpaceX's stock lockup is expiring. Prepare for a bumpy ride. That's the headline from the New York Times, and it signals a major moment for Elon Musk's rocket company. On Thursday, the first lockup on SpaceX shares is set to expire, freeing employees and other insiders to sell some of their stock for the first time. For a private company that's become one of the most valuable startups on the planet, this isn't just a routine paperwork event. It's a pressure valve opening. Here's what's happening. When a private company like SpaceX grants shares to employees or early investors, those shares typically come with a lockup period. That's a contractual window, often 6 months to a year, during which holders can't sell. The idea is to prevent a flood of selling all at once, which could destabilize the share price in secondary markets. SpaceX's first lockup started after a tender offer late last year, and now that window is closing. So what does that mean in practice? Starting Thursday, current and former employees, along with other insiders who received shares in that tender, can list them for sale on secondary platforms like Forge Global or EquityZen. These aren't public exchanges. SpaceX is still private, but they function like marketplaces where accredited buyers and sellers negotiate prices. The volume could be significant. SpaceX has thousands of employees, many of whom have been compensated partly in equity. For them, this is a rare chance to turn paper wealth into cash. The company itself isn't selling new shares. This is purely insiders cashing out. But the activity will send signals. Secondary market prices often serve as a proxy valuation for private companies. If a wave of sellers appears and buyers are scarce, the implied valuation could dip. If demand holds firm, it reinforces confidence in SpaceX's trajectory, Starlink's growth, Starship's progress, the launch cadence that keeps accelerating. There's also the Elon Musk factor. He controls the company tightly. He's shown little interest in taking SpaceX public, partly to avoid the quarterly scrutiny that comes with it. But lockup expirations create their own kind of scrutiny. They force a kind of price discovery, whether the company likes it or not. And with SpaceX's valuation already estimated above $180 billion, any shift gets noticed. For employees, it's personal. Some have waited years for liquidity. Others may hold, betting on an even higher valuation down the road. The market will reflect that tension. Analysts watching secondary trades will parse every data point, price per share, volume, bid-ask spreads, for clues about where the smart money thinks SpaceX is headed. Bottom line, Thursday marks the start of a new phase. Not a crisis, not a celebration, just the first real test of what the market thinks SpaceX is worth when the people who built it are finally allowed to sell. We'll be watching. Thanks for listening. I'm your host, and this has been your daily briefing.